All right. It is just after 10 o'clock, the published start time. So, do want to be respectful of those who are here on time. Thank you for being here and thank you for joining our latest session of our monthly webcast. And we appreciate you being here. We'll also record this. So, thanks to you all who will eventually be watching this on the recording. We appreciate you as well. We understand life is busy, so thank goodness for technology that allows all of us to watch various educational programs on our own time. So thanks for being here, and we look forward to you listening to our session. Let me move my. All right, my name is Carl Baker with Baker CFO Advisory. We're a modern accounting firm that provides business solutions to clients. Those solutions include traditional outsourced accounting, tax solutions. Uh, we call them CFO advisory services, but it's things like helping clients with the financial function, the budgeting, the forecasting, the help in growth. Hence, today we're bringing a session on breaking through growth roadblocks. I know there are a lot of businesses out there that are perfectly happy with where they are. They're a small business, a business that's very important to you. You are meeting customer needs, you're earning a living, you're accomplishing your mission, and all those things are wonderful, fantastic. And maybe you'll leave that business to your kids. Maybe you'll eventually sell it. You're not really focused though on quote getting bigger and a-okay. But I also know there are a lot of businesses out there that if they could, they would grow. And they have ideas, they have a vision, they think they know generally what they should be doing, um, but they are trying to figure those things out and trying to figure out how to get through those roadblocks. So we're here today to talk about those things. So what are we going to talk about? We're going to talk about some of the challenges that you're probably facing, that I'm facing as a business owner, and then we're going to segue into a few different things, including the things on the screen. We're going to talk about funding, how to fund your business. Uh, there's a hint. Here's a hint. It's not as simple as just going to a bank. I'm a borrower, you're a lender, give me money. It's not that simple. There's some positioning to do. So we are going to talk about that. We're also going to talk about how to set up financial systems that support your growth. Before the chaos gets to be too much, before you get too big, before you have too many things going on, I think it's important to set up the right system. So we're going to talk about that, and then how to then execute on your vision of expanding strategically. So we're going to talk about that. I say again, for those listening, if you have questions, drop them in the chat. If you're listening to this later, feel free to reach out to us. You can find our email on our website. It's info@bakercfoadvisory.com. But also, my personal email address is Carl, Karl, at bakercfoadvisory.com. So if you have questions, comments, our phone number is on there as well. Just feel free to reach out to us that way as well if you're listening on the recording. So you know this if you're a business owner, but what prevents businesses from scaling? And we've talked about some of these things in our past sessions. Again, we're designing these sessions to be germane to you as business owners, to people that are trying to grow their business, that are trying to add services, accomplish your purpose, and just have a quality business. So, what are some of those things? Cash flow issues. Having the right amount of money, managing the cash flow in a clear, systematic, professional way, lack of financial clarity. We're going to talk about that quite a bit today. Decision making is based on, and we've talked about it in the past, decision making is based on gut instinct instead of on real numbers, real data. So I've encouraged my clients in the past, and I've talked about it in this session before, but having a data-based approach to scale to running your business will be very helpful. Operational inefficiencies, processes that worked before are now creating roadblocks. We're going to talk a lot about that today. If you're planning to grow, if you're planning to scale, having processes in place are very important, and we'll talk about that. Unstructured expansion, expanding without proper planning. Planning is a key theme throughout today's session, so we're going to talk about that. If you are running a business, and I know how it goes, you're running a business, you are in the business, you are probably wearing all the hats, you're serving clients, making sure that you're getting to the next client, making sure that the client pays, using those revenues to pay your expenses, to pay payroll. It's very easy and it's very normal to have a reactive approach. So and with that, you have seen some of the challenges that I've talked about, I'm quite sure. So the solution to that is to transition from a reactive approach to a proactive approach in financial management. And I'll just say a lot of the things we talk about today are relating to finances, but a lot of the things we're talking about, I just want to say it early and I'll try to remember to say it later. It's not just about finances, and I want to say that. So as we're talking about various planning uh, features, planning criteria, processes, setting up processes. We're talking about it in the context of finance, but it really it can expand to a conversation about your marketing process, your hiring process, your sales process, your HR process, all the different processes that are in place. So just want to mention that. What are the 6 steps to make this shift? And I start with getting clear on your numbers and your why. Again, if your goal is just to make lots of money and that's really the only thing you can think about, you probably will get burned out. And there needs to be a purpose behind that. And we can talk about stories and about that. But I really just emphasize your understanding your why and making sure that that's aligned with your purpose, with your vision, with your interests to minimize burnout. I was listening to a podcast just this morning about a gentleman who had been running a business and he started a new iteration of that business. For a year, he didn't take any compensation. He was plowing all of his earnings back into his business in order to grow, in order to have the right reserves. Well, if you're doing that and well, I'll say it this way. He understood his why, and it wasn't just to take every dollar out of the business. He had a grander vision, and he knew that he needed to keep money into the business so that he could continue. And that really came from understanding his why. Getting clear on your numbers is another component of this. The importance of financial management, tracking, analyzing your financial data. I'll just say before I forget, I was also listening to another podcast just this morning, and it was a discussion about a business. It was a discussion about business owners that eventually want to sell their business. The gentleman speaking was a M&A, a merger and acquisition consultant, and he was talking about his clients. And he said the first thing that you need to understand if you're eventually wanting to sell your business is you need to have a clear understanding of your numbers and have quality processes. And those are a couple of the keys to success in your business. So having a proactive approach to your financial data. We talk in this slide about using QuickBooks. That's a great starting point, a great accounting package. Xero is another one. Some businesses even use a free accounting package called Wave. Using something, even if it's an Excel spreadsheet at the beginning, to separate your business from your personal and to start to establish some systems around your financial data. Implementing budgeting and forecasting is, again, especially if you're wanting to scale, if you're wanting to grow, if you're seeking financing either from equity partners or from lenders, understanding not only where you are, because that's what accounting and financial reports will give you. It gives you an understanding of where you have been most recently, but also telling the story about where you're going. And that's what forecasting and budgeting does. So creating a budget, creating a financial forecast so that you can tie in your history with your future. Strengthening your cash flow management, having a clear cash flow strategy to prevent shortfalls, especially if you're in a seasonal business, understanding how to tell that story and having cash flows, having cash and reserves in place is a very important thing to manage. Again, when you're starting out, you're trying to just cobble together all of your cash that you can, and I understand that. But as you're starting to go out to the market to scale your business, having a cash flow management system in place will be very important so that you can tell that story in a professional way. We talked about this session. We talked about this in last month's session, monitoring financial key performance indicators and reports regularly. First of all, understanding what those KPIs are and what the drivers are. You don't need 50, you need 2 or 3 probably to get started. Understanding what those are and then putting a system in place to track those, and those KPIs will help you tell the story most effectively. So conducting financial reviews. I'll say this as we talk about this, there is a difference between, and it's probably an overused cliche, but there's a difference between working in the business and working on the business. When you're starting off, you are definitely working in the business. You're wearing all the hats. You're focusing on executing on your early vision. You're focusing on getting new clients. You're focusing on cash. You're focusing maybe on hiring, sales, all these things, marketing, getting the word out. As you are scaling, there comes a time where you shift from being in the business to working on the business. There's a difference between serving clients and being a business owner. And there is an elevation to that process. There's a persona change, there's a mindset change. So all of these comments that I'm making are really around shifting that mindset change from the sole proprietor mindset to elevating to a place where your job is to manage the business, not just serve customers. So I think that's important. I say that that's what one of the thoughts that comes to my mind as I think about KPIs. You might think, well, how do I have time to do this? I'm serving clients. To really scale and to grow, it does take a mindset shift, and whether that is full time or whether you transition into that mindset over time, but that's important. All right, so here's a slide where we talk about financial processes. I cannot emphasize enough the importance of, as early as possible, identifying and standardizing financial processes. And again, this is where I'll also say it's not just financial processes, it's all of your processes. I use a phrase, the way. How do we conduct business? There is a way that you will conduct business. There is the way that you hire people. There is the way that you establish your marketing plan. There is the way you put your financial reporting together. There is the way you serve your clients. There's a process. There's the way that you onboard clients. All of those things need to be memorialized and documented in a set of processes. That might seem odd if you've never done that, but it is true. And this session is not specifically about how to grow and sell your business. We could have that session. This is a session about growing your business with maybe that as a end game goal. When you're growing, you are most likely you're going to need to seek financing, whether that is borrowing or seeking equity financing. Guaranteed, if you don't have quality processes in place, quality financial reporting in place, it will be nearly impossible to obtain successfully the amount of funding and the capital that you will need to grow your business. It's just a paramount thing to have these processes in place. And when you are early in the process, of your business's life cycle, that is, in my opinion, is the best time to start to think about those processes and put those things in place. Not just winging it on a daily basis, but really establishing those processes. So I do spend a moment on this because I do find that this is one of the areas that people maybe don't think about. And if they are getting to a place down the line where they want to sell their business, they might end up being surprised that potential suitors, potential buyers are giving them pushback about the lack of processes. So those sort of processes will need to be in place. So I do spend a minute talking about that because it's that important. Uh, Having a plan for growth and investment. It seems pretty self-evident, so I'm probably just going to leave it at that. But there is a time when I do think that you need to surround yourself, and I've talked about it before. There's a time when you need to surround yourself with professionals that can help you. You're not always going to be um, um, doing all of the roles and responsibilities. So yes, I'm biased. We are fractional CFOs. We are financial advisors. So I do recommend at some point using us or using somebody like us. I fully realize you might have your own set of resources, but there is a time when having a finance person on your team, whether it's fractionally or on a full-time basis or whatever is best for you, to help you grow the business, put some plans together. And I think that's just a key step. All right, so let's shift to one of the talking points that I said we're going to talk about, which is funding. When I'm talking to clients, and I have had numerous hours and hours and hours of conversations with people about seeking funding, seeking capital. And I'm the type, when I make decisions, I want to understand the universe of options. And from there I can at least understand what all my options are, understand where I am in the world of those options. I call it the financing spectrum. Where am I on the financing spectrum? What are the best options? Because it's not always as simple as you think it is. And from that universe of options, I can make the best decision. And I say, and we've put 4 items on here, but the way I articulate it, there are 5 options for you as you're scaling your business. And you might use all 5 of these in various stages of your growth. Those 5 options include bootstrapping. So what does that mean? You're using your own personal cash reserves. You're using, uh, uh, let's just, well, I'll talk about these real quick and then I'll just mention these. Bootstrapping, number 1. Number 2 is seeking capital from friends and family. Number 3 is seeking capital from investment partners. Number 4 is obtaining lines of credit or actually loans. And number 5 is grants and programs. That's the universe of options. And I say all the time, Elon Musk, the richest man in the world, when he bought Twitter a few years ago, he tapped into some portion of all 5 of these. So it's just important to understand this is the universe of options when you're seeking financing. So let's just walk through these. Excuse me. Bootstrapping, we talked about this. So this is a combination of using personal savings, and I've just in this slide lumped in seeking funding or financing or loans from friends and family. And then obviously as a part of this is your own revenue reinvestment. So you're providing a service to a customer or a client. They pay you, you pay your bills, and you take that difference, that profit, and you use that to earn a living. You take that money out to earn a living, or you keep it in the business and grow. That is a very legitimate, normal way to fund a business. And I've talked to many people that do that. There are pros and cons to that, but it is a very normal way to do it, especially in one stage of your life cycle. You maintain full control of your business. That's important. And but a con to that is that you will have a slower growth because the funding will be limited. So it's just important to understand that is an option with some limits. Number 2, loans and lines of credit. And I can talk about this before the session ends. I'll give a story about my own experience with this. But many people think I'm starting a business or I'm scaling or I am adding a new location or I'm buying a building, and I'm just going to go to a bank and I'm a borrower, you're a lender, and I'm just going to get a loan and it will be that simple. I'll tell you it's not that simple, and there is a way to do that. There is a positioning that to do that, and it's certainly feasible. I don't mean to say it's not possible. There is a way to do that. And one of the things that I teach people is understanding how to think like a lender will best make you qualified for that lending. But let's talk about these slides and then we'll drill into a couple other points about that. So what are we talking about with loans or lines of credit? We're talking about going to a bank or an investor lender and seeking a loan. What are the pros? You continue to maintain ownership while obtaining access to the capital that you need. The cons, as I've already alluded to, it does require a certain amount of qualifying in order to get that loan. So that's where understanding how a lender thinks comes into play. So if you're taking notes, understand, and every lender talks about this a little bit differently. I talk in terms of the 4 C's: cash flow, credit, collateral, and capacity of borrower. To keep it simple, those are the 4 things. So you need to understand where you fit in those 4 C's in order to understand how to obtain a loan and how you qualify for those loans. So that's something we might come back to, but that's a comment on loans and lines of credit. Investors and equity financing. To truly scale, to get to a size, I won't give a number, but it is a very legitimate option to start to obtain equity financing. In other words, you're given ownership of the business, selling a portion of your business to a partner in exchange for capital. The obvious pro to that is that you obtain the funding that you need. You will do that in a way that you won't have a payback on an immediate basis, but you will also dilute your ownership. And it takes a while to understand, takes a certain mindset to understand that's not necessarily a bad thing, and it just depends on where you are in your business's life cycle, what your goals are, and what you're really trying to achieve, and where you are in the market. So it's a very legitimate option, and there are things that you need to do in order to qualify. Again, and as you hear that, think about the concept of quality financial reporting, quality financial processes, quality processes throughout your entire business. And that's important to understand. Number 4, grants and government programs. Many people do think that when they go into this and they start to scale, they think, well, I'll just get a grant, some money that is not in the form of a loan, and I'll just say if you can find a grant or a government program, and they tend to be location based, they tend to be service based, ownership group based. There are options out there, and it's certainly a worthwhile exercise to research whether those options are out there. But I'll also just tell you there are very limited options. You're probably going to truly scale using one of the other first 3 options that we've talked about, probably number 2 and 3, the loans and equity financing. But it's a worthwhile exercise to look at the option of grants and government programs. So how to get funding for growth? We have alluded to some of these things already, but know your numbers. Investors, lenders will require clear financial reporting. We've talked about that already. Develop a business growth plan. Planning is a key theme here, so it's important to have that in place. Be able to tell your story, be able to tell make the connection between where you've been, where you're going, and that business growth plan will need to be pretty comprehensive. Again, it's more than just finances, but obviously finances tells the story of the business. Understanding your risks. So ensure you can manage repayment terms, or if you're borrowing funds. A lender is actually just renting money to you. That's really what they're doing. They're renting money to you, and they want to understand in all cases how that money is going to come back to you. So they're going to poke holes in your business plan. They're going to poke holes in your personal financial statements. They're going to poke holes in your own capacity just in case, not that they're rooting for it, but just in case the project falls apart. If the project falls apart, they still want their money back. And so how would that happen? And a lender is going to manage to those risks. One of the things that I think is important to understand as you are seeking financing, a lender is not going to take on your business risk. So there are risks involved with owning a business. There is, and I put it into two categories, and there are other ways to articulate it, but there is business risk, and then there is lending risk. A lender is not going to take on your business risk. Business risk would be defined as whether the business succeeds or not. If the business doesn't succeed, the business owner is taking that risk of possibly losing their house, losing their assets, losing more cash, whatever. That's business risk. A lender is generally not going to take on that risk. They're going to manage to a different set of circumstances. They will give you lending risk. They will lend you money in the hopes that it will come back in the plan. But if not, there will be other ways they want to be able to get that capital back. So understanding those risks and understanding how to navigate through that is really one of the keys to success in obtaining capital. All right, so let's transition out of the discussion about capital and raising money, and we could have a whole session on that alone, and maybe we will at some point. Reach out to us and let us know if you want to hear more about that. Actually, I'm really hungry for your feedback about that. Why financial organization matters. It seems, again, it might seem self-evident, but you've heard me talk about it in a few points throughout this session so far. But financial organization matters in multiple ways. It will help you prevent cash flow surprises, financial mismanagement. It will help you put a plan in place. We've talked about it before, but it will help you secure funding more easily, more effectively, at the level that you want, at the terms that are at a win-win situation for you and the funder. And even if you aren't seeking additional capital, a proper set of processes and quality financial organization will matter in that. Number three, it will help you make better decisions based on the data that you have available to you. So what are financial systems to implement? And we've talked about a few of these things, but number one, having accounting software and automation, making use of technology to the most effective possible way. It's very common for businesses to use QuickBooks, Xero, other types of call it entry-level accounting platforms. I know QuickBooks is also in the process of rolling out higher level accounting systems. It's a truth that as your business grows to a certain level, there are going to be other accounting software packages that will make more sense to you. Honestly, QuickBooks is a great starter system, but it's not really designed for a business where you have fully leveraged the accounting function to somebody else. And there are other software packages like Intact and several others. But the gist of this is to put a system in place, to use technology to automate your systems, expense tracking, financial reporting, etc. Budgeting and forecasting, setting clear goals, having those goals, thinking about those things, and then putting a system in place such that you have budgeting and forecasting in place, again, so that you're aligning where you've been, the history, to where you're going. Financial reporting and KPIs, we've talked about that as well, but it's important in the context of what are the systems to put into place. So the financial reporting and KPIs will help you monitor your critical metrics, will help you identify what those metrics are, and then continue to regularly review those. We come back to number 4, internal controls and processes, implementing checks and balances to prevent fraud. That's something that we don't want to take for granted. Again, as you think about a growing business compared to where you are in the early stage of your business life cycle, where you're wearing all the hats, and eventually you start to leverage leverage all those roles, the processes and internal controls that you put in place will not only be good as you're seeking funding, which we've talked about, but also it will help you mitigate the risk of error, mitigate the risk of fraud in your financial systems. And it's just something not to be taken lightly or for granted. Signs it's the right time to expand. Number one, most importantly, you have to have customers, right? So if you have high demand for your products and services, and understanding where you are in your market share, what is your market penetration rate? What is your market share? And that might be different in different locations. You might be in a mature place where your market share is starting to cap out, which might be the reason why you're looking at other locations, or maybe there's enough demand that you're thinking about other services. But one way or the other, understanding what your demand is, you have to have customers and clients, and that seems so obvious, but it's a it's really a truth, that the customer demand will be a reason for thinking about bringing more services to the market. I have clients that have really been thinking about that a lot. They're focused on growing, scaling, putting systems in place, and the reason is they are doing such good work for their customers that they think they can do that on a scaled basis, and they told me recently it's time to start doing that. And it really came from that customer demand. Number 2, does the business have consistent profitability and strong cash flow? That's another sign that it's the right time to expand. That's also something that will be paramount as you tell your story to funders, whether it's lenders or equity partners. There will need to be a need to show that history. There's a difference between a startup business and a business that is been in place for 5 years. That story and the appetite for lending will be different between those two situations. So having that consistent profitability, and then are your financial systems and operational processes in place and ready to be scaled? So I think that's important to understand. We're starting to come to the end of our session, wrapping this up with a few more slides. Common expansion mistakes and how to grow them, or how to avoid them. And I am going to spend a minute on this slide because I think it's very important as you think about your business and where you are. So growing too fast without systems, and I have seen that, and that's why we've spent a few times talking over and over about the importance of financial processes. Otherwise, what you have is chaos, and certainly I've seen where businesses are growing almost despite themselves, where there's so much demand that you're just keeping up with that demand. But if you're not backfilling your operations with quality processes and you're just winging it, then there will come a day when that will create problems, guaranteed. And so, growing too fast without systems is something that is common, and it's relatively easy to mitigate that risk. Expanding without a financial plan is another sort of related comment. If you are growing because of high demand and you're not putting those systems in place, and you're not putting a plan in place, then there will be limits as to what you can do. There will come a day when that will come back. If you reach out to a lender, and I've actually seen this happen recently, where a business that has been in place for 30 years, um, Great track record, clients love them, good service, they're expanding, they go to a bank, they say, "Hey, can we get a loan?" The lender, unfortunately says, "Well, your financial statements are a year behind, you're not caught up. It doesn't look like you have a financial plan, you don't have any forecasts, you don't have, quality financial reporting historically, your tax returns are a year late." And by the way, this wasn't a client, so we would help them mitigate those issues. But those sort of things will limit their ability to get the financing they need in order to grow their new location. So that's something that's important. Over leveraging with debt. So we have been talking about the need to scale with lending, equity partners, etc. On the flip side, what is borrowing? If in a best case scenario, you meet your client service, you meet your customer needs, they pay you, you pay all your bills, you have money left over, you pay yourself, and then you have money you pay yourself a satisfactory amount, and then you have money left over that you can invest in the business in one fashion or another. In a perfect world, that would be the way to scale your business. The reality is that just doesn't happen. Again, I go back to the Elon Musk example. Elon Musk didn't just pull money out of his pocket and buy Twitter. He put together an ownership group and got some lending and other things. So, uh, securing debt, securing financing, what you're really doing is you are investing in the future. And I go back to what I was saying, in a perfect world, you wouldn't need to do that. You would just use the profits that are left over and grow your business that way. That's just not a reality. So instead, you seek working capital, you seek funding, you get a loan from a bank for a building acquisition or whatever. You're really investing in the future, and you're putting money out there before you have those revenues, and you're hoping that the revenues that come in from that investment then will be available to continue paying yourself, investing in the business, and also paying that debt back. If you put money out there too quickly, without quality systems, without the quality financial plan, and those monies don't come in from that investment, then you'll end up being in a situation where you are over leveraged. And that's a situation that will create problems. It will limit your ability to continue growing, and you'll end up with debt that will be difficult to pay back. So they all go hand in hand, and they all go together. And that's why we talk about it on this slide. So I think it's just important to understand how one, two, and three all go together. Best practices for sustainable growth include securing funding in advance for expansion related expenses. So I just got finished talking about the risk of over leveraging, but that doesn't mean that it's not something to look into, and it doesn't mean that it's not something to do. To grow, you probably will need to seek financing, but if you need to do that in a right way, where you can demonstrate demand, you can demonstrate that you have quality reporting, you can demonstrate that you have processes in place. And many people, the age old comment about lenders, which is that they'll loan money to businesses that don't need it. But here I am, a borrower that needs funding because I need funding. That really comes in, that really is true. Positioning yourself to qualify for lending in the right way at the earliest possible time will help you grow and scale. Ensuring new locations and services align with your business goals. Again, it all comes back to the planning. And then monitoring your financial performance during those growth phases. All right, what are some action steps? And this is the last slide. And again, thanks for being here today. And again, if you have questions, please put them in the chat. If you're listening to this later as a recording, reach out to us. My email is Carl, Karl, at bakercfoadvisory.com. Call me. Phone numbers are on our website, and feel free to ask us questions. Always happy to have a conversation. But on this last step, what are the action steps for business owners? Number one, take what we've talked about today and apply it to your own situation. Assess your own financial health. Are your books organized? Would somebody see a good set of financial reports in place? Do you have a clear growth budget? How about a plan? How about forecasting? Do you have processes in place? Explore the best funding options. Consider your goals, risk tolerance, funding requirements, and understand where you are in that place. Take a professional approach to funding and know how a lender thinks. I will finish this slide and then I'll tell you a quick story as an ending. Optimize your operations before expanding. So what does that mean? Again, ensure systems and processes are scalable, they're in place, they're replicatable, they're memorialized, they're documented, and then create a plan as you have assessed and built all of that, putting all of these concepts in place. So just a quick story. When I was, well, it was about 20 years ago, a little over 20 years ago, I was a corporate auditor. I was an aspiring entrepreneur. I wanted to build a business. I wanted to quit my job and start a business. I did not put these plans in place. I was naive, just to be honest. And I thought, well, I'll just go down this process until I hit a barrier that I don't want to try to overcome. I'm certainly not going to mortgage my house and put my life at risk. That's what borrowers are for, I thought. Or what lenders are for. So I'm going to just go to a bank, get an SBA loan. I'm a smart guy. Surely they are there to lend me money. I'm a borrower. They're a lender. I've heard of the concept of SBA loans. I'll just get a loan. And then I won't have to I won't have to mortgage my house to start this business. I'll just get a loan and start the process. Well, I contacted several lenders basically under the premise of, you're a lender, I'm a borrower, smart guy, I want to start a business. It's obvious this business needs to be in place, and can you give me a loan? And I physically, audibly got laughed at least once, if not more than once. And I realized that there needs to be a plan in place. Quite frankly, I wasn't ready to do that. I could navigate through that today, and I have done that. But putting these plans in place will help you avoid what I went through 20 years ago. And I will leave it at that and just say, thank you for attending today. My contact information is on this slide. I've given you that email address. And then I'll also say, don't forget to continue paying attention to our series, because next month we're going to talk about taxes and planning. What does tax planning even mean? And you might say, well, you're doing that after tax season is over. Very intentionally, I am raising awareness of the fact that tax planning is not something you do when you're preparing your tax return. It's not something you do in December. Tax planning is something that you plan for, you think about. So we're going to talk about tax planning right after the excuse me, right after tax season ends, and what you need to be doing. Excuse me. And we would look forward and welcome you attending. So I'm going to leave it at that and say thank you for attending, and we will talk to you next time. Thanks a lot. Bye-bye.